Good evening, all. And Team Polkadot India welcomes you all to an exciting, inspiring, and insightful evening ahead. Introducing DotFriday. It's a series that would be focusing on introducing some of the best Polkadot projects from India and around the world. A series specially designed for retail investors and crypto enthusiasts, taking all of you blockchain and crypto lovers into a fantastic conversation about making it big out there. On that note, it gives me great pleasure to call upon my boss, mentor, friend, and of course, the founder of Polkadot India to kickstart this evening and introduce and welcome you to the community. Welcome, Amit, and they are all yours.
Thank you. Thank you so much, Ananya. While Substrate Saturday is going to be happening from next month onwards, I have that background right now. Hello, everybody. It's great to be with you on this edition of DotFriday. And for those of you who are first timers over here, welcome. And those of you who are coming again for the second time, welcome back. So as an introduction, why we are doing what we are doing, let me just walk you through that a little bit. Polkadot India is a community of crypto enthusiasts, people especially interested in learning more about the Polkadot ecosystem, which is going to be likely one of the world's leading chains. Working on interoperability and cross-chain communication and building dApps that are possibly breaking the barrier of usability that currently exists in the crypto world. Simultaneously, we're working very hard on building a developer community which can build applications, products, protocols on Substrate, and hopefully over the next 1 year or so, we would look forward to a couple of Polkadot parachains coming out of India and about 100 different projects that we've been able to seed and support. One more thing that we intend to do is connect the global Polkadot investor ecosystem with Indian entrepreneurs and vice versa. So we have a ton of things planned. Initially, it's going to be a series of events like these, which are generic, which probably help understand the specifics of blockchain. What does it take to build a blockchain business? And over a period of time, we'll start doing some more specific and specialized events, which are to help developers or help entrepreneurs or help investors who are looking at making investments into crypto projects and more specifically Polkadot projects. Now, one of the things that we want to achieve today is you help a lot of people understand what does it take to take a real world business and take it to the crypto world. So both the speakers and the projects that we're talking about today are solving a real world use case, which is not a crypto first use case, and leveraging things that are possible with Web3 and crypto, with Indian teams solving a global problem from India. So that is one of the intentions of this particular edition of DotFriday. Shantanu has a question in the chat box. Just a minute, Shantanu. Let me just get to the question.
So he says, what's the future of Polkadot blockchain development ecosystem in context of India, and especially when we don't have a regulated market yet?
Sure. See, regulation is generally good, for development because it very clearly specifies what's possible, what's not possible, what's legal, what's not legal, right? And till the time it's not regulated, you definitely have a completely free run to do whatever you want to do. Thereafter, in case the regulation is not in favor of what you're trying to do, you might have to consider, changing the jurisdiction of your company and becoming more compliant. So right now it is a relatively free environment, but with regulation and clarity, things will become even more streamlined just because people don't want to disrupt their flows. Let's say you don't want to, stop your company in India and go ahead and incorporate in Singapore just to be able to continue what you were doing. So a couple of real life examples will be coming over to you very soon, Vamsi. In fact, both the startups that are actually going to be talking about their journeys today, Unore and Polytrade, are solving some big real world problems, and they're solving it with a lot of blockchain centric innovation. So would request you to experience it firsthand shortly. So Naveen, you've asked any sessions on participating in the upcoming parachain slot auctions. Excellent question, and I think we can create some content around that, and even possibly get some people who have done that already to take one of the sessions. So it's a great suggestion. We'll keep it in mind and keep you posted. Please join our WhatsApp group, where we will update you about some of these discussions and even involve you and some of you in shaping the agenda of the upcoming talks. So with that, I hand it over again to Ananya, who could drive the agenda of this particular event forward. Thank you all for participating, and we look forward to learning from you and engaging with you more deeply in a more meaningful way in due course of time.
Thank you. Thank you so much, Amit. Glad to be a part of Polkadot India and hoping it's a highly skilled and interactive community in the making. If any of you wish to get in touch with Amit and also these questions that you've all sent out here, we will get them answered by him and share them with you. So moving on with the evening's highlights, our inspiring guest leaders. So reinsurance has gained more relevance since the COVID-19 pandemic that disrupted global economies. It essentially refers to insurance for insurers. So this has gained prominence since it dilutes risk further and allows insurance companies to take on large and risky clients. Giving you Unore, this was one of the first decentralized reinsurance marketplace and provider that is dedicated to serving the need for proper insurance services in the DeFi sector and cryptocurrencies industry by democratizing the trading of risk. So as you know, this is known to be a very high risk industry. So that's where these guys are highly relevant as of today. The platform breaks barriers to entry for the retail investor by doing away with the historic prerequisite of high capital, which is generally needed to invest, and also allowing its community to propose innovative insurance products to this space. So these two started years ago, doing various things together, including beating the norms and winning global accolades over the years, including the Microsoft Hackathons, the Seaside Startup Summit in 2018, and even the NEM Blockchain Challenge in 2019. Standing the test of time and killing it together still more than ever before, let's give it up for the buddies and the very founders of Unore, Jaskanwar Singh and Sujith Sizon. A hearty welcome to you both, and over to you to take us through your journey. Sujith and Jaskanwar, over to you.
Thank you so much. So thank you for the kind words that you said, and we've had a long run together, definitely. So the way we'll be taking it forward is I'll be talking about the idea, and then Sujith can take it forward about how we went about through the actual implementation. So we both met in college. We started the first decentralized vehicle registry solution here in the region, and as you said, we won various awards and accolades, and we also got the Ministry of Economy's award for most innovative company. From there, Sujith went into consulting. He went on to become a consulting rock star, basically, having worked with various government and non-government agencies. He worked on their technology implementation, insurance implementations, got it done, while I went into insurance, and I was eventually the CTO of the third largest health insurer just before venturing into Unore. Having already done a blockchain startup, we always followed the space and had investments in various DeFi tokens. We realized that while DeFi was booming, the protection and the insurance solutions for DeFi were not. So that's where we thought, yeah, there's an issue. And the issue was also there's a dearth of capital, which leads to problems in funding insurance products, innovative insurance products, certainly. And we wanted to decide to solve this problem. In order to solve this problem, we had to decentralize the entire process of building insurance products, funding insurance products, and ultimately trading insurance products. That's where the idea was born. So the goals were to allow investors and stakers to access risk as a means of generating passive income. Basically, we wanted to give the rich man's tools to the retail investors so that they can earn passive income over time, leveling the playing field. We also wanted to allow the creation of new insurance products so that products actually work at the time of claim. And we wanted to build a DAO to facilitate this entire procedure. We also wanted to commoditize risk. So similar to stocks, people can, come in, close, and open their risk positions, similar to how you do it with apps nowadays. And so Unori was born. Three verticals: Unori for investors, Unori for traders, and Unori for innovators. Now I'll leave it to Sujith. He would talk about how our three were built and what was the motivation behind them.
All right, perfect. Thanks, Jas, for the introduction. What I'll do is I'll basically walk everyone through the timeline of how we went about developing our solution, what we have been doing for the last 2 years in like a ordered fashion so that we don't lose out. The first thing that we did was designing out the app. We already had, at the time we started Onori, we already had a team of designers as well as developers from our previous company, where we were providing blockchain consulting solutions for. So we already had a team in place. We got them on board. We asked them to get the designs ready, and fairly quickly they were able to put something together which represented our vision of the 3 products that we were building out, which were called Unori for investors, Unori for innovators, as well as the risk trading platform. Post that, this was somewhere in April 2020, we ran a couple of focus groups. Since it was like in full lockdown mode almost everywhere, we ran it over Microsoft Teams. We got a lot of our peers from the insurance space, from the crypto space. We got on board a couple of advisors. We asked them what they thought about the app. How could we improve it? The goal was for anyone who would visit our app, instead of going through the landing page or the white paper, they should get to know what they're supposed to do on the app. If they want to buy insurance, the process should be so simple that they don't have to refer external material. And we went through a couple of weeks, a couple of different iterations of the app, and by around late April 2020, the first POC of Unori was born. Post that, we got into implementation mode. We already had a lot of developers on board who were working on previous projects for our blockchain clients. And as you know, because of COVID, we had a shortage of clients. So most of these devs were free. So we thought, like, let's just put them to work. Let's see where this things leads us. So we told the guys about the concepts. They quickly started building it out. We also had a actuarial and a team of risk ones who were developing the models which we could use to code out the smart contracts as well. And fairly quickly, also this is where the Polkadot journey begins, is when we started seeing problems during the technical implementation. I'll pick out the three biggest problems that we faced and how we chose Polkadot to be the solution for that. The first one was obviously the gas fees and the transaction speed. Most of the competitors in the crypto insurance space, namely, like, let's say the big players, Nexus Mutual, Armor Finance, Core Protocol, etc., they were primarily operating over Ethereum network. And for a common user to be able to get an insurance for their portfolio of like $1,000, they would be charged a premium of let's say $50 depending on the protocol. Now, the problem that existed was that the gas fees were so high that you would have to pay almost thrice that amount just to buy that premium, which did not make sense to any users. Because if I'm insuring my asset by paying $50 and I'm paying, like, let's say $100 in gas fees, that revokes the utility of buying that insurance. That was like sort of the first big problem that we saw. Second was that there were a lot of blockchain networks which were coming live. People were building blockchains left, right, and center, and They were putting their hard-earned money and locking it up in these different blockchain platforms. And we knew that if we wanted to build a self-governing or like a fully scalable system, our platform had to be interoperable and had to exist on a multi-chain network. Um, the, the third biggest problem was the complexity of the mathematical operations that were involved. Usually when there is anything related to insurance, it's always based on probabilistic mathematical formulas, and probabilistic mathematical formulas are not that easy to implement in Solidity. We would have like back and forth discussions with our devs all the time, and like the quant team would just give out formulas and the devs would be just so confused that how do we code this out. It's like virtually impossible because they would deal with like logarithmics, exponentials, etc. That's sort of when I remembered watching all those videos of Gavin Wood, how he used to talk about building like a blockchain network for other blockchain networks, the whole concept behind Substrate, using Substrate as a framework. And we just loved the idea that he was using Rust, which is a fairly more mature language compared to Solidity. It overcame a lot of hurdles for us at that point from a technical implementation point of view. And that's sort of like the reason why we chose Polkadot. Also, the whole fact around having a runtime WASM environment, relay nodes, having external proxies, etc., just helped us solve like a lot of things which we could perceive as being challenges in our technical implementation. And at that point of view, at that point of time, we decided that we would split our team into two parts, because we had already our core Solidity devs working on the smart contract at that time. And we set up a new team who were basically responsible for working on the Rust side, on the Substrate side. They would set up the blockchain network from scratch. It was a fairly simple process. They were mostly focusing on coding out the same smart contract logic in Rust so that it's more efficient and it's more easier to build up later down the line. And yeah, around August, that's when we started picking up most of the development activities on both the teams, and the first MVP of let's say the minimum viable version of Unori was completed. That was again run through different focus group to like basically improve it. At that point, we started seeing new problems, which sort of are like non-technical in nature. We realized that we need more funding because getting blockchain devs was getting expensive. We knew that we needed money for marketing this product out. And additionally, like we also knew that in order to kick out this product, we needed a bit of initial capital so that we can fund our initial reinsurance pools. And that's how we basically started with the whole fundraising process. Just if you want to talk about the fundraising process a bit.
Sure. Thank you, Sujith. That was very detailed, and I think it helped a lot of people basically who were devs to understand how Polkadot impacts the development side of things. So around March and April, we realized that we need to scale up the dev team. We need some funds, as Sujith said, and so we started scouting. Okay, let's try to raise money on the crypto side of things, because Sujith and I, we've been involved in multiple startups, and we had a lot of experience in TradFi VC funding. We had a lot of VC connections, but they knew nothing about tokens. So we were like, okay, let's get on a few advisors on board, and we got to learn from them, and started writing the white paper. It went on to about 80-90 pages, and then we worked with a few industry legends, some PhDs in blockchain, and we tried to condense it to a readable format. so that a lot of things which are insurance related, which are blockchain related, they can be read by common people. They can be read by people who are new to the industry, new to even tech. So, and then the second part was to actually take all of this information and condense it further into a pitch deck, which also took a lot of time, because there are, as a founder, you have so many relevant aspects that you want to mention, and you want to mention on investor calls, but you only have a few minutes to convince someone whether to invest or to not to invest. So we went from that part, and then eventually we were so well received that I went from taking one call a day on certain days, and then within like 2-3 weeks, I was taking at least 15 to 20 calls. So I was not sleeping at night. I used to wake up in the middle of night, match the time zone of the investor, do the call, make sure that we have enough funds to have a runway of at least 18 to 24 months. It also reached a point where we had limited allocations, and we only chose to give to the investors. Instead of raising more, we chose to give to the investors who would be long-term partners in this journey. Because while we were in traditional side of things, we realized that VCs and partners who you take on board, they create a huge impact in the later stages of the game. While there are hiccups, it's the time that you need the maximum support. So what this assumption of ours was actually validated when we had the market downturn in the middle. We did a 3-month lock on our investor tokens, and not one of our investors came to us and said, "Why did you do that? I need my tokens." So we were blessed to have a lot of investors. We were also blessed to have a lot of good investors. So after we closed the fundraising part, we also had a lot of debates as to why to raise, why not to raise more, why to only raise what we actually need. And we did a lot of calculations as to what would be the worst case scenario on the runway. Once all of that was done, we decided to apply to various launch pads, and thankfully we were chosen by the best, which was Polka Starter, and we went on to learn a lot from them in terms of the entire IDO process, whitelisting process. We had Sujit. Do you remember we had around 600,000 applications to enter the whitelist, managing bots? It's just it's a crazy kind of adrenaline rush that you get during those days, from going right into development to having so many people talk about your project, so much hype around the project. Then eventually it was the D-Day, 28th April. We actually went and listed. We had a great listing, and that's basically it. Sujit, do you want to take it up from here?
Yes, I'll talk a bit about our app launch and meanwhile what was happening in the background. So while Just was primarily focusing on the fundraising, there was a lot of things happening on the development side. Um, Even though our product was ready by late 2020s, we had started testing out the app and had started noticing a lot of problems. And this was also when, unfortunately, um, like COVID was in like full disaster mode all over like India as well. So since most of our devs were based out of India, we ran into sort of like a hiccup where there were bugs, a lot of issues being reported on the app, and there were not enough devs to like help work on those issues and get it up and running. So we sort of went into a disaster recovery mode, and I remember sometime in around Feb or March 2021, that's basically this year, I had a team huddle, and I got everyone, all the devs on the call, all the designers, and we basically changed our strategy a bit. We also had started noticing some delays with the parachain rollouts. The requirements of getting winning slot auctions were also getting tougher. We had some issues with our parachain partners as well. So we started noticing some really bad hiccups, and we did not want to be late. There was a lot of activity happening in the crypto markets. People were staking their assets, locking up their assets in really vulnerable smart contracts, and we knew that we cannot delay the launch of our app. So we switched our strategy a bit. We decided that we will launch our app first, like the MVP version, on a smaller network. Probably like at that time, we were exploring like Kusama, doing like a testnet release on Kusama, but we just realized like, let's not waste time on that. Let's like just do a main rollout on a core chain. Binance Smart Chain was selected out of that call, and we went ahead with the launch. Our first version was a bit limited in its nature. We just launched this end of last month. The restrictions on the app include like we had fixed size staking pools. That means you can only stake your assets up to a certain amount, and you can only stake your funds in USDC, and the USDC which is staked in those pools are used to provide capital that could underwrite premiums up to like $1.1 million. The total size of the risk pools were $500,000. So we basically have like a 2.1 collateralization ratio on all the insurance that is being bought on our platform. Now, we obviously did this because we wanted to get feedback from the market, see how people are reacting to it, and sort of understand what the requirements of people are and how they're looking forward to the app. Now, there was in terms of, let's say, like what lies ahead and what we have planned for the future. The first thing is that we will be launching a reinsurance framework on as like basically like an open source substrate module, which can be used by any protocol to define like a custom insurance product for themselves. So it's going to be like an open source package. Projects can like just fork it, customize their requirements, like how much collateral they want to underwrite their policies with, upload their audit reports, submit their team specific information, where to get the TVL from, what's the current status of the smart contracts, etc. And then once they submit the pull request on the repository, it goes through our DAO, where our actuarial team members will vote on it, and then it gets passed on to be added to the insurance pool to provide capacity. That's currently under development, and we're planning to launch that by early to mid 2022. That's on the Polkadot side. On the other side, on the like Ethereum and Binance Smart Chain side, we are launching the V2 version of our app. I'll let just give a quick brief on that.
Sure. So what we realized during this journey was that a lot of our competitors in the insurance space were focusing on actually DeFi insurance is still very young. A lot of our insurance competitors are focusing on the top 100, top 200 tokens to give insurance to them. However, there's a very big market of the non-top, top 200, top 100 tokens that are there that nobody is focusing on. These are the ones which are more vulnerable, and these are the ones which actually need cover. So we realized, let's do something about giving insurance to these tokens and to people who actually hold these tokens. So in short, what we're doing is we're going to be the first protocol that will allow insurance almost of any asset on chain. We will instantly analyze the risk that an asset carries based when a user connects their wallet, and based on some on-chain analysis, which is powered by machine learning. By this analysis, we will underwrite the premium at the same moment itself and allow the user to pay the premium in the native token which he's insuring. Thereby, as Sujith said, we wanted to make insurance easy, accessible to buy. This entire insurance product or suite of insurance products would be backed by the UNO token. And this would basically exponentiate the utility of the UNO token, which will be the first token and the only token which can be used to invest and stake into these pools and basically earn passive income in a host of different tokens, including stable coins. So that's what we have for V2. We're aiming for a launch in the next few weeks. We also have a version 3 coming very soon. Version 3 would allow us to have dynamic staking pools, and can stay tuned to our channels to get to know more about it. So that's basically it from our side. Sujith, do you have anything else that you wanted to share?
No, I think that's it. I think we overshot the time by, I think, around 4 minutes.
My apologies for that.
Oh, not at all. In fact, you have more time. You have about 10 minutes more, out of which we can take a few questions also. So please share some more with us if you have anything.
Sure. I think we can go ahead with the questions if there are any. And if there is time left after the questions round, I can maybe discuss some stats about our app.
Sure. Okay, so we have Shantanu asking us, what was the reason for choosing Polkadot as a platform to launch Unori?
Yes, good question. So primarily, as I indicated, it's 3 core reasons. One was that we didn't want to be levy to high gas fees, which exist currently on the popular blockchain networks. We wanted to have like lower transactions fees and like faster block speeds. So that meant deploying our own, blockchain network, and Substrate gave us like all the power in the world to be able to do that. Second main reason was interoperability. We knew that if we wanted to build like a self-governing system which could exist for a long time in the future, it needed to operate across different blockchain networks. And the way external proxies were configured in Polkadot, and how you could use the relay chain to basically aggregate different blockchain networks, all at the same time being inside a single blockchain network, that just solved that problem for us. Last but not least, actually there were a lot more problems, but the third core problem was the complexity of the mathematical operations which we were doing. A lot of the claims information and the risk analysis dealt with probabilistic and statistical formulas, which are always like exponential, like it's complex mathematical operations, which are not easy to implement in Solidity or any EVM compatible, network. It's like, it makes the smart contract too bloaty, and it's very hard to build upon later on. And Rust was the perfect solution for that. We loved the fact that like Substrate was built from scratch on Rust, and it just gave us a lot of power in terms of building really strong, like smart contracts or like automated systems.
Great. Okay, so our next question would be, what are the guidelines of IRDAI with respect to an insurance based on the blockchain, as they are regulators of the insurance sector, and is it allowed?
Okay, that's the Indian regulator. Great.
Yeah.
So there are currently no regulations on blockchain, and certainly no regulations on insurance on blockchain. But the way that that we basically circumnavigate this entire issue, I would like to say that it's an issue, because if we don't have regulation, we don't know how to operate a business. So how we circumnavigate this issue is, UNO is planning to set up an insurance protected cell company. An insurance protected cell company is basically a mini insurance company. So what you do is you choose a jurisdiction which knows how to set up insurance entities, such as Bermuda or Guernsey or one of these jurisdictions. You go and you put some capital there, and the jurisdiction would allow you to take risk up to certain USD based on the capital that you've put. This allows the policies that UNO would be issuing to be actual insurance policies, which means that we will obviously be having a DAO who would be, doing the claims management, etc. But if you're not satisfied with all the things that you've gone through and you still want to, get your claim adjudicated, you can actually take the policy, go to the court, and get your claim reimbursed if it's an actual valid claim. So that's my 2 cents on how we manage regulation till regulation is evolved enough.
Great. Okay, so another question, very interesting, but so once the bull run ends, if anything catastrophic comes up, how is the UNORI token support if, if things go this way and if it exceeds the market cap, how do you plan that?
So the question is, if the bull run ends, what happens to UNO, right?
Yeah.
So that's a very good question. We get asked that a lot. For UNO, when we set it up, our main goal was to go beyond crypto. So what we wanted to do was we wanted to decentralize the entire process of insurance, but that does not mean that we would restrict ourselves to crypto insurance. Right now, the reason that we're only doing crypto is because there is a lot of opportunity and there's dearth of insurance. If there's like a bear market and the asset size decreases, that doesn't mean that the business is going to go. It just means that the premium that you're getting would be lower. What that would allow us to do is that would allow us to explore opportunities that are outside. We're already tying up with many multinational reinsurance and insurance brokers so that we can move their assets and insure or reinsure or quota insure them on chain. So for us, if there is a bear market, it allows us to expand outside crypto. If there is not a bear market, it allows us to even capitalize on the size of the assets that are increasing.
That makes sense. Great. Thank you so much, Jaskanwar and Sujith. This was highly insightful and mighty kind of you to share all of it to the detail that will help us all best. It was great having you both, and a very warm welcome again to the Polkadot India community. We'll be glad to stay in touch.
Thank you so much. Really appreciate everything that you guys have done, and the audience has been great as well.
Great. Thank you. Thank you all. If any of you have any further questions for Jaskanwar and Sujith, do reach out to us on Twitter again, and we shall definitely get them all answered from the founders themselves. Yeah. And also, guys, join us on WhatsApp for quicker updates and to stay connected with the community. We have the link on our chat up again. So as we see, it's not just about the idea, but the drive, the persistence, and the consistency, and not to miss the proactive action that Jaskanwar and Sujith have shown through the years. So for all of you out here, please note that UNO tokens are tradable on KuCoin, Uniswap, and PancakeSwap, and let's wish them luck for the upcoming version 2 launch. Right. On that note, moving on, next up is one of our prides and a pillar at Polkadot India, our very own blockchain mentor, Varun Gyanchandani. The sector is new and knowledge to be gained is unlimited, but we got to start somewhere. And here's giving you one of our best to get the basics right. Varun, over to you. Blow us away.
Well, thank you, Ananya. And thanks to all the people who have been able to make it to this first ever chapter of DotFriday India. Well, this talk is mostly going to be around the reasons of why we have come up with a series on Polkadot. So we all are aware of one thing, that is the creation of new platforms or chains is picking up majorly, because there is some or the other issue with the previous running networks like Bitcoin and Ethereum, right? So we all know that there are a few issues with the legacy networks. Like, for example, there is very limited amount of communications between different chains. So blockchains in itself are very good at interacting with each other, but they are very poor in communicating with other networks. Well, it's not impossible, but it's slightly difficult. For example, let's take gossiping. Okay, let's say you and I, we are sitting in one particular table and we are trying to make a conversation So somehow we all would be aware of what we are trying to communicate. There is a certain amount of truth that is being maintained in that particular table. But what is happening on the other table, what sort of gossiping is happening, we are not aware of it completely. There would be some amount of truth if it even comes to our table, might not sync really well. We can't trust them completely, right? So this is one of the major issues when it comes to blockchains and different networks not able to communicate freely. Okay. Now you have also seen that legacy networks get clogged up often when too much of traffic comes in, because they're not designed that way to handle too much of traffic. You would be aware of transactions per second on Ethereum, which is around 15 to 20 transactions per second. Then you would be aware of Bitcoin, which takes around 7 transactions per second. So these are some of the issues in the legacy networks. And then there is no customization currently onto the previous legacy networks. Now, choosing a single network means no customization, really. It's like one size fits all. But with the current growth and ideas, for example, we had an idea from Unori. Okay, there is a lot of customization that they have done to meet their business need. So all of this was not possible earlier, but this is happening over the period of time when the new protocols or new networks are coming in the picture. And since it was very early starting days, so there was some amount of still centralization part of the entire blockchain system. So there was very poor consensus initially. There were many consensus algorithms floating around in different networks. Now, which are kind of difficult to come to a consensus regarding the future of that particular network. And it doesn't make it, to be honest, very, very decentralized, which we all are actually looking for. And the main and the fifth issue is that there were difficult upgrades. You would have heard about hard fork or a soft fork happening in this chain or that chain, because the software is getting updated. People want to do something new, but then the fork happens, right? So in order to move into all of these things, we came up with a solution which could be resolved using different functionalities. Okay, now we all know that blockchains are very good at interacting with data stored on them. But inherently, or interestingly, I would say the communication with other chains without trusting an intermediary, as I explained earlier, is very, very complex. Now, if we think about it, the issue in itself takes away the charm of decentralization at its full-blown capacity. Like every blockchain is making sure that it is decentralized, but it is still operating in its own silo. But if this particular communication channel opens between this particular network to other network, then the concept of parallel communication across projects would be very, very big. This entire concept would be very big. And that's the reason Polkadot came in with the concept of parallelized applications. Now, you can actually say that Polkadot came up with a one-shop solution for all of the above mentioned legacy issues. In Polkadot, you can connect different networks together. It is able to connect all those silo issues by bridging them together, and also by not keeping your application to be a specific use case, but a custom use case dedicated to solving one issue, like we just heard about Unori, but parallelly making other things also work by communicating with each other. Now, for example, if I, as a team, we as a team want to develop a particular application which utilizes certain functionalities of Unori, so we can just pass the messages using Polkadot's relay chain, the main chain, using and pay no fee, actually very, very limited amount of fee. It's bare minimum. But if this particular communication has to happen on a different network, we all are aware that how much of the gas fee we have to pay. Okay, and as earlier I was explaining about traffic. So Polkadot handles heavy traffic. Its transaction per second is around 160,000 plus, whereas Ethereum, as we discussed, is around 15 to 20 transactions per second. Now, with the concept of parachains, there is also a concept in Polkadot, which could be utilized by applications which just want to test their logic. So there is something known as parathread. This you can say it as pay as per you go. Okay, you don't have to mint the blocks continuously, or mine the blocks continuously. On the other hand, the moment there is a transaction happening, only that particular block gets finalized. So this way you are paying very, very less, and you are only active once the block is actually being mined onto your thread. So they came up with this particular option as well. Now, Polkadot for us is kind of a next generation blockchain that unites an entire network of purpose-built blockchains. It allows any type of data to be sent between any type of blockchain. And it also unlocks a wide range of real-world use cases by bringing together the best features from multiple specialized blockchains. So I gave you an example with Unori trying to make a conversation with my application. So there are already applications which are being currently tested on Kusama, which are actually live also, which provide an opportunity to kind of work on the application which utilizes decentralized identities. And if there is another application which is a data marketplace on its own, they want to, kind of utilize these decentralized identities and mix them together onto their platform, they can do that. But on the other hand, on the other networks, it is not possible yet. Now, if I try to talk about the main thing, which is, can you please go to the next slide? Yeah. Now, if we try to talk about this particular thing, this on the silver line that you see over here, the silver lining, this is nothing but this is the entire relay chain on which Polkadot is actually operating on. This is you can say their own server, their own application, right? And the dots that you see are connected to that. Those are going to be the parachains or the business logics or the applications that various teams would have built it. And there are hundreds of slots available for different business use cases to make a communication from one parachain to another parachain. And on the other hand, on the right side that you see, there is a small rectangular towards the out, the rectangular box, that is nothing but that's a bridge to make that communication possible to the other networks, which are not part of Polkadot ecosystem, but can be, made a communication with other networks like Ethereum, Bitcoin, Tezos. So all of this actually happens very, very smoothly. The bridges part, I believe, would happen probably by next quarter or next to next quarter. This is work in progress. But the parachain auctions, as we all are aware, will start on Polkadot also from 11th of November. I would check the date though, but that is what I've heard of. So you can build your applications and can make it really go far by utilizing the entire Polkadot network and the ecosystem. And the community is really growing, scaling. We have our in-house Substrate developers, Rust developers, and we would be coming up with Substrate Saturdays, as Amit had already mentioned, from the next month. And looking forward to more and more participation and open to questions. Any type of questions regarding development, how does it work, how does Polkadot ecosystem works, you can directly shoot over here on the chat, or you can just raise the question. I'll take it forward.
Sure. Varun, I think we have a couple of questions. Firstly, so blockchain is very new for many Indians. So how much knowledge of coding is required to dive into the blockchain metaverse?
Understanding blockchain as a concept is not going to be that complex. And to be honest, even I was not a blockchain developer, but over the period, because the resources are very easily available these days, you just go on Google and there is one plethora of information available regarding Polkadot, how it works. and they have Substrate development as a portal. You can just go on to substrate.dev and learn on your own at your own pace. But in order to understand Substrate, the learning curve could be slightly steep. It's better if any individual who wants to understand the functioning of Polkadot or any substrate related chain, it's better if they pick up from Rust first, because if you have a knowledge on Rust, it will be very easy for you to pick up on Substrate, and you can develop your own logic and own chain.
Sure. Can Polkadot connect with existing enterprise networks as per organization firewall policies to get or use organization data?
I don't think those particular, how Polkadot basically works is like they make RPCs calls available via the runtime APIs. So we need to check whether they have actually written that via Substrate yet or not. But I'm sure over the period of time, this bridging possibility is going to be very, very active. And because of these use cases, it will definitely happen soon.
Sure. Okay, great. Thank you so much, Varun. I think we will be hearing a lot more from you in the coming months at Substrate Saturday. And we request all of you to definitely come on board to a lot more from the blockchain world. Yeah.
Sure. Thank you.
Great. So it was coming to our next speaker. It was an absolute pleasure for me to interact with him, especially when he said about what about those traders or SMEs sitting helpless in various parts of the world on account of no capital or payment capacity. Shaping the world and the future of trade finance, this decentralized protocol provides real-world borrowers access to low-interest and swift financing to free up capital, especially critical working capital, that is tapped from the crypto lenders. So presenting Polytrade bridges the gaps in traditional receivables financed and accessing the untapped crypto liquidity. So basically a veteran in business transformation and product management and experienced in building and scaling sustainable businesses, our next speaker comes with a 15-year-long rich consulting and business management experience. Early 2017, he started dabbling away with the blockchain and cryptocurrencies world. And today he stands tall for the thriving Polytrade. Give it up for the CEO, Arul Prakash. Arul, welcome to DotFriday, and we are all ears to hear what your story and the Polytrade story is.
Awesome. Thank you very much for this opportunity to talk with a completely new and a different set of crowd than I'm usually used to. And it's always great to see that we're putting in so much effort from an Indian ecosystem perspective to get us in front of blockchain. I mean, I believe we had a lot of opportunity way back when the century started to be in front in terms of the internet businesses, but somewhere either those opportunities move abroad or the people who created those opportunities moved abroad, right? But this, I think, is a great reset for all of us, not just from a economy perspective, but also from a tech superiority that we should be able to establish ourselves, right? So it is great that Polkadot India is taking such an initiative and bringing in a lot of real world businesses, projects, and also like Varun was sharing, and I was learning a lot of new things about how Polkadot works. It's really interesting that we're all able to share all of this. So like Ananya had mentioned, started off with blockchain somewhere around 2017. Much before that, most of my work was with the retail and consumer goods industry, and I was working with TCS as part of the business consulting team for about 5-6 years. And then I was with Accenture Strategy Consulting, again based out of India, and worked on global projects and Indian projects as such. Specifically focused around how to build and scale businesses. And because I had a lot of a tech affiliation, always all my solutions definitely included technology as one of the levers to achieve that. And since 2017 or so, like I said, was dabbling around with blockchain and crypto. And during that course, also I joined Tata Digital, which is again, I'm sure you would have read through quite a few news. It's growing rapidly, and I was heading the product development for all the Tata brands. And for the last 4-5 months, been driving Polytrade from a crypto perspective, and operating as a CEO for it. So what I'll do is, Ananya gave a very long, arduous explanation of what Polytrade is. But I'm sure, as usually the audience doesn't get it, largely because it is a concept that most people are not aware of. Only the people who are actually in the industry actually get to know about trade finance or invoice receivables as such. So I'll just go about explaining what the business problem that we are trying to solve. Then I think the technical technology solution and how we are trying to solve it with blockchain will kind of fit into the place as such, right? So specifically, the area that we're working on is part of trade finance. Okay, now trade finance is a $7 trillion industry, right? Not billion, $7 trillion industry every year. As an industry, it's about 7 centuries old. So we are not innovating specifically, largely because we are trying to modify or improve an existing process as such, right? That is our specific goal. Now, if you see within trade finance industry, because it has been going for so many years, much of the markets is also consolidated, which means that large finance providers are more or less it kind of merges onto the top, right? So you will have your ABN AMRO and Citibank and these kind of organizations largely driving the large businesses. So what happens is they've been really old. They've been there for quite some decades together, and their processes that they have been following, because the industry is also old, the company is also old, the process that they follow also is quite old. And because of that, there is a lot of overhead that a lot of these organizations have. Now, how does this overhead translate in terms of businesses? If I am, say, a manufacturer, if I am bringing them a business of, say, $100,000, right? They are less inclined to encourage me rather than someone bringing a business of $1 million or a $5 million. That's because their overhead is very high. That is the first thing. Second thing is that the time taken to do any particular task also increases a lot. Obviously, that comes with its own rigor. Not saying that all the processes are redundant. It comes with certain size and scale and risk aversion that these organizations actually have. And because of these two specific issues, the challenge that comes up is, out of the $7 trillion industry is something that is already existing, right? What is not getting addressed is something close to $1.6 trillion, right? That's quite a large chunk of 7 trillion. Now, this $1.6 trillion worth of industry, which is not getting addressed, typically caters to all the SMEs, right? When I say SMEs, it is small and medium enterprises. And this is a problem not just in emerging markets, but is also a common problem in the developed markets as well. So Polytrade specifically is trying to address the market of these small and medium enterprises by providing them access to working capital. Okay. Now, let me break it down again, what it means to when I say working capital, right? So what happens is, okay, within trade finance, we are trying to solve a problem called invoice receivable financing. Okay. Now, if I were to give an example of what typically happens, imagine there is a manufacturer sitting out of Ludhiana or Tirupur or any of the bells, right? And he is supplying to the likes of Zara or Walmart. Now, Walmart typically would receive the shipment and make the payment to the manufacturer after a certain number of days. And this days can range anywhere between 30 days to 120 days based on what category of product it is, right? Whether it is consumable, is it an electronic, whether it is an apparel. And typically apparel and footwear have the longest duration of credit period as such, which can extend up to 120 days and so on. So what happens for 120 days is that the manufacturer has manufactured his products, delivered his products to Walmart. Walmart has accepted it, and Walmart says, I will pay you after 60 days. So there is a severe crunch of cash that the manufacturer has, because one, he has to pay his own raw material suppliers. He has to pay salary to his employees. He has to pay electricity bills, right? So he doesn't have cash to do that particular activity. And this is exactly what we call as working capital, right? You need certain capital to run your business. Now, typically in the industry, what happens is he would typically approach a non-banking financial entity, NBFC or any other lender, and kind of ask them for money, right? And if they are a small invoice person, if they say their invoice is only about $20,000-$30,000, the inclination of the banks or the large entities to encourage him is very less, which basically means that because of working capital crunch, he is not able to work on further orders that he could have delivered to probably another retailer, say in the UK, right? So that working capital crunch actually limits his business growth. That is the impact that it causes. Now, what does invoice receivable financing do? It basically ensures that we are able to provide him that working capital. Now, I mean, everyone is aware of, Aave and Compound and other protocols that are available where you have borrowing and lending function. But there are two issues with that. One is there is obviously a very high barrier of knowledge around crypto. And second is that all of those are loans which have to come with a collateral, right? Which means that I need to deposit cash to take cash. And obviously the problem that we're trying to solve here itself is cash. So what we do is we take the invoice that the manufacturer has received from Walmart and say that I will take this invoice as a collateral and I will fund your invoice. Okay. So if his invoice value is say $100, we tell the manufacturer, okay, give me your invoice. I will provide you $95 today, right? And he will get the $95 cash and he's able to run his business further. After 60 days, I go back to Walmart and I tell Walmart, see, I have this invoice that you were supposed to pay this particular manufacturer. I would like to have that invoice payment against that particular invoice, right? So I get the $100 from Walmart. So the difference of that $100 and $95 that I actually gave to the manufacturer is basically the margin that I make on the business, right? So this is what has conventionally been going on. There is nothing new on this. This is exactly what we're trying to replicate, but from a crypto business perspective. Now, why are we doing it in crypto is that, like I said, the SME financing itself is a major hassle when it goes to larger enterprises, which exactly we are able to cater. Why we are able to cater is because we are going in more from a digital native model, right? We are not a centuries old process that we're following, a decades old processes that we're following, which makes us slow or redundant. So we are making it completely digital, thereby reducing the time taken to fund that particular person. Now, usually the what people ask is that, are you going to give it at a lesser interest rate than a bank? Why would they come to you, right? Those kind of questions are what typically get asked. But we need to understand the pain point that the SME has. The manufacturer's pain point is not cost of capital, right? It is access to capital, which basically means if a bank is giving him, say at an interest rate of 10%, okay, he is happy to pay 15% if you're willing to finance him today rather than make him wait for 3 weeks. Right? So it is access to capital, which is the issue that we're trying to solve, not exactly cost to capital. That is one of the points from a business perspective. And also, if you say, I'm sure, there is, how many people do we have here? We have about 62 people, right? And I'm quite sure that, at least about 40 to 45 people do not have an understanding of trade finance as a business, right? Or even are even aware that it is an asset class. It is a place where people actually invest money. Just like you invest in mutual fund and stocks, there are mechanisms where individuals can actually invest, not exactly individuals, but larger enterprises can actually invest in invoice receivable financing as a business because it is extremely lucrative, right? The APYs that get offered here are almost double than what a FD account can actually provide to any one of us. So we are trying to also democratize that particular process. We are trying to bring that down to an individual. Today, if I were to get an exposure to an asset class like an invoice receivable financing business, I should have probably a minimum check size of around $100,000 or so, right? Obviously, different places, different regulations apply, but most of the markets, it becomes completely unviable for us to, invest $100,000 in a particular single asset class as such. So by putting it via crypto, we make it as simple as even $1,000 or even $100 person will be able to get an exposure onto an asset class like invoice receivable financing. So that is more so the benefit that crypto investors can get from this. I hope that's quite a long rant. I hope that explains what we are trying to do from a Polytrade perspective. I guess trade finance kind of bored people, I guess.
No, actually, we've not kept it too interactive right now during the session. We've been asking them to post questions elsewhere. Right. But now that we have
that is the usual challenge that typically completely B2B kind of businesses face, right? So if you ask most of the people, what business would you like to run for yourself, they would probably say a restaurant. Right, or a cafe, because they understand it most, because they use it the most, right? Even though there are a lot of things that they don't understand. So I guess it is the same issue. So people don't understand a B2B business, so they're like, okay, how do I even think about starting a trade finance business?
Right.
Fair point.
Well, but we do have queries. So Vinod, we have Vinod with us, and Vinod, can you post your question to us in the chat? Yeah. So we have, how would you deal with the price protection and also validate seller or end users?
Awesome question. So basically, from a price protection perspective, right? I mean, this is a standard practice that is followed, across all businesses. Now, if you are financing an invoice of a particular currency, you tend to take the cash also in the same currency as much as possible. Now, if you don't do that, what you expose yourself to is something called as a forex conversion risk, right? So if I take forget crypto, right? Even if I take something like a Indian rupee or a GBP and start funding invoices which are denominated in US dollar, that creates a lot of issue, because after 30 days or after 60 days, when I'm going to collect payment against my invoice, I don't know what the conversion rate is. So there is a lot of chances of losing out cash. So our model is completely based on stable coins. So any lender has to deposit stable coins, and any invoice that gets funded also is done by stable coins. Initially, we're going with US dollar, but as we're quite, almost everyone knows that, sooner or later CBDCs are going to come. They're going to have digital currencies which are run by countries, and we'll be happy to, absorb them into our platform and support all our businesses. How do you validate seller end users? Okay, so considering that we are completely working in a regulated business, right? This is not something which is not being done. It is not like Aave or Compound, where it comes out of nowhere and there is no precedent, there is no law. Here we have to comply with whatever the World Trade regulations and practices are, what the import guidelines are, what the export guidelines are, what the finance related aspects are. It has to be complied to. So almost all our users on a platform on either side, which be them lender or borrower, are completely KYC, right? And when we do the KYC for our borrowers, which are the manufacturers, we also do a lot of validation, whether their business exists, have they done business in the past, are they trying to launder money, are they trying to do a cross-border transaction in the the disguise of an invoice payment, and all those specific points as such, right? So all of those things we definitely do take care. And there is if people are aware of trade finance industry, there was an organization called Greensill. So we have specifically a credit risk assessment lead who has come from Greensill and who's helping us set up the entire practices around how to validate and how to assess the risk for all of these players as such.
Okay, that's lovely. Great. So the next one is, what are the changes that trade finance requires to be taken on while moving on to the decentralized network, transfer network?
Got it. Okay. See, one thing we'll all have to be very clear, right? Think about it. 15 years back, we used to have internet banking and we used to have banking, correct? That is how it used to be. Today, there is no banking without internet banking. I'm sure you will not even open a bank account if you don't get access through UPI, or if you're not able to do NEFT or even able to access their portals. Now, that is the change that banking went through, right? So that is the change that finance as an industry went through. Now, the same change is right there. right in front of all of us, right? Tomorrow, there is not going to be a DeFi and a CeFi. There is no centralized finance, decentralized finance tomorrow. There is only finance that will continue to be there. Just that we will start seeing it moving more towards the decentralized models because of all the benefits that, almost all of us are aware of. So that transition has to happen, not just from a trade finance industry perspective. I think it is common across all the industries, right? The biggest challenge obviously right now is, interoperability, challenges around talent, challenges around, how do you separate out an economy, a model driven by economy, right? Which a blockchain as such, Bitcoin as such, was conceptualized to have money as part of blockchain. How do you separate out crypto from blockchain and get the benefits of only blockchain? Now, these are the solutions that enterprises are currently working towards. Obviously, they've not figured it out, or even if they have figured it out, there are different places that come to that. Now, within trade finance also, and within trading overall as an industry, there have been multiple attempts by the enterprises to kind of bring all the players together and so on, right? So one of the biggest benefits of blockchain, or one of the benefits and the how you need to architect it, the solution itself, right? It is basically trust. Rather, you don't need to trust. So you only deploy a blockchain based system in an enterprise situation when you have third-party entities on the same network whom you do not want to trust, right? The point is not, whom you want to have a trustless transaction with. There's a difference between not trusting and a trustless transaction, right? So the whole benefit of blockchain comes into that space, into the enterprise space, only when you have an ecosystem play, which means that I should have a customs agent, I should have a shipping agent, I should have a banking agent, all of these people on the same network. And right now, enterprises are suffering there, largely because it is very difficult to get everyone on board to a tech platform. I can't ask a shipping company like Maersk to come onto the same platform, a shipping company like Kuehne+Nagel to come onto the same platform, a bank like SBI, HDFC, ICICI, all to come to the same platform, but not fight about IP rights of who the platform belongs to, who the data belongs to, what level of data do I share, right? These are all the challenges that they are still trying to figure out. And I would assume that the same thing will happen here also. It will gradually evolve, which is exactly why we've taken a very different approach from a trade finance perspective, from a Polytrade perspective. We are just hitting the nail on the largest and the easiest solvable problem to start off with, right? And we will keep iterating and keep increasing our product so that it keeps covering larger areas of trade finance as such overall.
Nice. Okay, there's one more question for you, Arul. So there are a lot of frauds in trade finance due to multiple financing that's happening on the same invoice, and banks are trying to implement blockchain for that. Yeah. So how do you protect that, since you're not a part of regulated finance network, or are you taking some insurance?
Okay, so in our model, I mean, that is one very important question, right? This is the usual challenge that almost all trade financing entity actually face, is that of double financing. So the same manufacturer goes to HDFC also, ICICI also, shows the same invoice and gets the money from both the places. That is the usual challenge. Obviously, blockchain is an awesome place where you can actually solve this problem, because once that invoice has been transacted upon, it is visible to everyone that someone has already financed over here. Now, in our case, like I said, we are taking a very small incremental approach to solve a very large problem as such. So we are going to, from a process perspective, if you see, what we do is we reach out to the buyer, right? Buyer is a company like Walmart, and we talk to them saying that, we've got this particular invoice and you have to finance, I'm going to finance this particular manufacturer. Are you willing to pay this money to me after 60 days, right? So there is a particular agreement that has been signed with the buyer stating that this particular invoice can only be financed by me. Now, if there is another, say HDFC Bank goes today, or tomorrow ICICI Bank goes, tomorrow the buyer is not going to sign that, because he knows that this particular invoice has already been financed by HDFC Bank, and that itself acts as a very small check. But over time, like exactly the question, as enterprises come along, we will see that this data sharing will happen much more seamlessly. We don't even need to go and talk to them. Everything can be digital. That is how it will evolve. And to kind of call this out, right? These kind of issues are, like I said, all prevalent. Now, as part of the Polytrade team, our business is not new, right? So we've been doing our business for the last 7 years in a non-blockchain version. So completely understand what sort of processes are involved. We've financed about $500 million worth of invoices till now, right? So we know all the nuances of what the regulation is, what the practices are, what sort of documentation needs to be done, how to protect ourselves against any kind of risk. So all of those measures are being built into Polytrade. Now, the other question was around, how do you cover yourself from these kind of, first of all, fraud or even say willful default. Assume that, tomorrow Walmart says that I don't have enough money to pay you this $95. What do you do? Right? So all the invoices that we finance have to be insurance backed, right? So there is a particular insurance called credit insurance. In fact, Unore team was the first one that we spoke to pertaining to credit insurance, and we will be partnering with them as soon as both our products are ready and live to make even the insurance product decentralized as much as possible. Right, so the credit insurance basically covers any particular entity against willful default or bankruptcies. So if Walmart says that I don't want to pay, or I don't have the money to pay, the insurance company is liable to pay Polytrade, right? So that is how we kind of cover our lenders' investments in Polytrade as such.
Nice. Great. Well, that was supposed to be the last question, Arul, but we have a very interesting one. So I'll go ahead and ask you so. So how are you going to mask the users of few clients who do not want to reveal the transactions when relating to financial terms?
Correct. So this again is a age-old problem. People don't want to reveal a certain level of details because the buyers that Walmart has access to itself is a very confidential information that Walmart doesn't want to share with, say, a retailer like Carrefour, right? Because that relationship gets built over time. So it is definitely a valid question. And the way that we do that is on blockchain in a direct fashion. We never post any individual or organization identifiable data as such, right? So all of that information will be completely masked and it will be posted on blockchain largely. See, because you'll have to try to understand what is the problem we are trying to solve here. We are trying to solve the problem of financing, right? So as long as the money gets transacted, the money gets funded and the transfer happens, there is no need for certain other transaction details, organization level details to be captured in the blockchain. So we only capture what is required. And if there is any kind of organization identifiable or person identifiable details on the particular transaction, we just kind of mask it out.
That's great. Great. I think that's about it. Arul, I think we're done with the questions. So thank you so much. You'll surely inspire many with the focus, the importance given to build, team and process, while being okay with simply dabbling with something new and making it so big. So welcome to the Polkadot India family, and we are glad that to have you around.
Thank you. Thank you very much for having me here. Thank you.
Yeah, thanks, Arul. Also, for all of you out here, please note, Polytrade is actually looking for experienced full stack developers. So if any of you are looking out or know, and if you're game, get in touch with us or simply reach out to the Polytrade team directly. Also, we are definitely, connecting with all of you, and we are available on Telegram, as well as the social media channels, as well as on WhatsApp, and you can join us with the link in the chat box. So our next speaker for the evening started with crypto back in 2013 when he heard of Bitcoin. He gambled his way through many bull and bear runs over the years with a very exciting journey backing him. So luckily for us, we'll get to hear a bit of it today. And he's a very highly successful angel investor and the founding partner of Arcanum Capital. Welcome, Karthik Bupathi. All over to you for all that you have to share with us.
Good evening, guys. I believe the majority of you guys are based in India. I'm actually based here in New York, New Jersey area. Thank you for the introduction. I'm really happy to be here. I remember speaking to Amit when, and one of our partners named Rahul about when we went on this kind of advice on this Polkadot venture, and I'm truly kind of astonished to see like how fast and how big this community is getting. And it really just kind of affirms my bullish thoughts on India as a landscape for just rapid blockchain innovation. I mean, the people here are just simply extremely hungry. But yeah, I mean, I could just go into like a quick introduction about me. Yeah, so like I'm founder of Arcanum Capital. I've been in crypto since 2013. You know, I first stumbled upon Bitcoin when I was in college. I was a broke college kid, so I couldn't really buy that much, but it was fascinating to me because as a technology, it was just so interesting at the time. You know, at that, you know, back in that day, 2013, 2014, if you wanted to like get involved, the only way was either buy Bitcoin, or if you were broke or you were more of a tinker, you could, you know, buy mining rigs. And I did that process in college. You know, I didn't have any electricity. I just mined using the utilities. I thought it was free money, but you know, it was very competitive back then because you would be mining random altcoins. And it was simply Wild West. I mean, crypto is still Wild West now. It's a little bit more organized. But like kind of going through my journey, you know, at once, you know, Ethereum launched in 2015. It basically broadened the design landscape, right? It was once Ethereum launched, it was just like, there's other things that you can now do in this space besides, you know, being a brokerage, right? Which was the primary business, right? If you want to run a business, it was be a brokerage or just be a speculator. With Ethereum now launched, you could actually become a builder, right? You could actually build protocols, you can build infrastructure, you can build, today you're seeing DeFi building blocks. So it basically broadened the building landscape. And I think that was really the start of when we started seeing, you know, smart people actually leave their traditional tech jobs and actually start coming into crypto. But I would say at that time it was a little bit slow. You know, kind of fast forward to 2017, 2018. You know, I think we saw, you know, Polkadot got incepted, right? It only launched, you know, a year and a half ago, but we started seeing these different ideas of layer ones come out, right? And to me, I think like I was never really an ETH maximalist. I think that every layer one has their own advantages, right? Like, you know, today we're now seeing, you know, Ethereum, they say it has the most highest level of trust, you know, biggest ecosystem, right? Most developers, the chain of culture. But, you know, now you see Solana, for example, low latency, right? They say that might be it might find its use case with, you know, the DeFi applications, right? If you're building derivatives, structured products, you would probably want low latency, and ideally Solana might make the most sense. And then there's also the other kind of train of thought, right? The school of thought, which is multi-chain world, right? And I think kind of Solana and Ethereum existing together, right, kind of validates that, is that we live in a world where chains can have different use cases, and ideally you'll focus for, depending on your use case, you'll build on that chain, and ideally in the future, these chains can seamlessly connect, right? Because there'll be bridges, what have you. And yeah, I think what am I getting at? I think it comes to the idea of like Polkadot, right? I think, you know, the world is definitely going to be multi-chain. I think in 2017, 2018, there are a few projects I advised. Two of them came out of India. I worked with Sentinel, DVPN, and then I worked more recently with Persistence. But yeah, I think like kind of the development of thought was just like, you know, the world will be multi-chain. We're going to see specializations. You know, eventually we might see like enterprise use cases, or like even centralized entities, right? Like your traditional finance plugging into DeFi applications. So yeah, I mean, I think the idea was like, and I think Polkadot thought about this really early on, was just like the world is going to be multi-chain. There will be specializations. And I think, you know, now fast forward to today, I think people have now accepted that. I think people did not think about that for a while. It was really ETH was going to take over everything. But I think today the world has kind of now, or the industry has accepted that there could be, you know, multiple parties and multiple bridges working together to connect these blockchains. Yeah, so I think like in terms of, you know, I've been an operator in this space since 2017, right? And more recently, I started a fund called Arcanum Capital. A lot of my partners, one of our main partners is based in India. And the idea behind what I believe I see what's happening was that I do see that the Indian landscape is growing. I think the blockchain ecosystem is in a severe lack of developers. So there's significant kind of upside intellectually and from an opportunity standpoint for developers to come into the space because it just makes sense. It's so fascinating. It's basically a perpetual loop of learning. And I truly believe that India has India does have one of the biggest developer ecosystems in the world. There's various communities. You have some of the biggest Golang communities here. You have some of the biggest Rust communities here, relevant to Substrate, right, which is heavily in Rust. And I do believe that we are on the cusp of a lot of these, young, students not saying only AI and saying blockchain, right? I think that's starting to happen now because we've had significant successes within India, right, with Polygon, especially, right, just kind of paving the way and making the space so exciting. So yeah, I mean, to kind of like talk about our fund, like our fund is kind of heavily focused. We're on kind of seeding Indian companies, right, or Indian founders. We believe that the blockchain ecosystem here is going to grow exponentially. And we really focus and work with founders at the earliest stages, right? Because I think because the space is still kind of early for founders here, I think that they need resources, they need advice on protocols to build with, how to get from point A to point B, how to fundraise. I think that space is still evolving within India. It's not as mature as, obviously America or Europe or even China for that matter. So I think that there's value for funds like ours to be there at the early stages and helping them through their journey. So yeah, I think that's just kind of my story, how I got from point A to point B, and how I went from, self-investor, right, to a builder, right, and to now now institutional investor at the VC side. Yeah, so I mean, this kind of talk, I want to talk about a few different things, right? This was meant about angel investing. Where do you start, right? I think people always think about the space as like there's so many different things. How do you become like an angel investor? Or I would say investor in this case, because if you think about this space, right, there's so many ways. Like in traditional VC, angel investment is like, speaking to these founders, these builders, and getting into these private stage companies. But I think in crypto, it's a little different because projects go live a lot quicker. So you can actually get invested in companies a lot earlier before they actually realize their perceived success. What is an example of that is just like, if you look at the past 2 years, you saw DeFi protocols, right? Like a lot of them are valued very low, right? They're valued at 10, 20, 30, $40 million, right, for valuation perspective. And for context, right, if you look at traditional VC, right, angel investment, traditionally see a lot of these seed deals happen at those valuations. So what I'm trying to get at is that you don't actually have to be a private angel investor in this space. You can actually buy these on open market and be early to these protocols and have the same upside as angel investing. And I think that's the democratic approach that I realized in crypto, is that if you put in the work and you do the research, you can actually get into projects at angel valuations, despite them, like they don't have to be like unlaunched, they could be open market. So I think that's something to keep in mind. But I also get into like how you can get to angel investment within the space, right, pre-launch, and like how can you build, research disciplines, and how can you get close to these builders, which is very important, relationships. But yeah, I think like, where do you start, right, in the space? I think some of the most important things for me personally has always been like research and learning. I've been doing that since 2013. I've been doing that continuously. I think you have to, some of the resources I use, there's a variety of different newsletters you can follow. There's like Global Coin Research. There's, if you're into like seeing DeFi projects launch, there's the Daily Ape. And there's a variety of different ones on Twitter that you could find. You just have to do some research. I can perhaps share that with Ananya, maybe a list, and she could share it with you guys later on. But like a lot of my time every day is spent on like joining project discords, building a Twitter. I follow a lot of different people on Twitter like that interest me from a build side. I don't really spend time looking at traders, right? I spend my time looking at builders, right? And at projects or sectors that are more interesting, right? For example, if I like NFTs and I want to get into them, I find people that I think have seen success in the space, and they have some eye for NFTs, whether it's like minting, whether it's communities that they see growing. I just follow these people and I just continuously keep learning, right? I think I don't know, it's a feature or a bug, right, in the space is that you never stop learning, and like if you do not spend the time in, you will get left behind. So for some that might seem daunting, but for me, I think for the people that really thrive is just keep learning and understand that it's always going to move forward. And as long as you kind of put in the work and you keep researching, you will always kind of figure out what interests you, right? And I think there's multiple sectors in the space, right? Like I think in 2014, 2015, or even 2016 for that matter, it was very easy to like be on top of like one sector, one protocol, or like just follow one place. Or like, sorry, it was very easy to cover the whole space. But today the space is so big and so wide, and there's so many different sectors, so many different communities, so many different ways to like actually create value and understand what could be valuable, that I feel like it's probably better for you to focus on certain, like a few things than everything, because if you focus on a few things, you'll actually know that, you know, ecosystem or that product or that protocol or that community in and out, or that sector in and out. And then you will achieve success, in my opinion. It's just too broad nowadays. Another thing that I also recommend as well is like crypto is pretty big. You know, if you're starting out, you're a young guy, a young girl, and you want to figure out how to navigate it, I always recommend like building groups of friends, right, together as a team, and you guys research it and you talk about these things and you kind of build like a cabal. I think like crypto to me only got substantially interesting, and I think success only started once I started collaborating with other friends, you know, in a win-win scenario. I think the space is so broad, and like with a team, it's very easy to like, you know, basically cover more ground, right? Like quite literally, you know, different focuses. And I think that was something that really evolved with me, because there's a lot of things I could learn from my friends and a lot of things that, you know, they learned from me, right? Because, you know, it's just, research is multidisciplinary, like it's very broad, and I think everyone can contribute to it. So yeah, I think that was like one of the few things that were really pivotal for me. Like I spent a lot of time on Twitter, spent a lot of time on Discords, right? Like if you're seeing projects that have launched that are very early and you don't know how to, you know, assess, right? A lot of the time I go into these Discords, I speak to the founders, I ask them questions, and I start to understand what they're trying to build. And I actually think when you're assessing a project, especially within crypto, I think people it's understated sometimes how important community is, right? Like you could build amazing technology, right? But if the community is not there, it will not succeed, right? And I think a perfect example of this is Cardano, right? Like I'm not trying to give a slight, but I think like Cardano's tech is not the most flashiest, but they built amazing community, right? Like they don't have the craziest technology, but they have an amazing community and they got traction, right? I think, and you're now seeing this now with Doge, Sheep, right? Like these coins are essentially meme coins, but they have amazing communities and they exist, and they will probably always exist, right? They probably got Lindy effect. They're probably Lindy now at this point, so they'll never go away. So I think like that's important, right? Is assessing the community within crypto, because the day crypto goes public, like when you launch these protocols, they're public from day one, right? And one of the biggest denominators for these of value for these protocols are truly the community. So it's very important to understand how these protocols or these founders treat their community, how strong the community is, because that gives you a good tell of where this is probably going to go, right? If the community is very strong and they believe in this, it's probably a good tell into like where you could see this going. Again, this is just ways of doing due diligence. Another thing that I would kind of talk about in this space especially from, I would say, the angel side, right? Like if you wanted to get into actual angel investing, right? Like, investing, like at the private stage or like pre-launch, right? It's very competitive nowadays, right? Like I think there's a lot of capital in the world. I'm sure you guys have seen A16Z, I would say Paradigm, a lot of these big funds, they've raised billion-dollar funds, Multicoin, for example, multi-billion-dollar funds. And rounds are starting to get way more competitive because a lot of these founders and teams are more likely to go to these, VCs, right? They'd rather have these big name VCs than, a small angel investor. So like, how do you become an angel investor, and how can you be considered as an investor, next to A16Z, for example, right? Or these other big funds. And I think the way is, it doesn't happen overnight. You have to build your network, right? The space is only going to keep growing. I think, for example, Polkadot India it's going to be a community, I feel, of like builders, right? People are interested, curious. And I think those are eventually, right? I'm sure there'll be people that will come out of, this community that will probably build a protocol, right? Like within Polkadot. And you guys all together in this community will kind of engage with each other, right? So I think what I'm trying to get is like, you want to build your networks from day one and you'll eventually get there, right? Always keep speaking to builders, always be intellectually curious, right? Because I think a lot of people don't realize, they say, what can I contribute? What can I contribute? But even if you're a simple user, for example, right? And you just provide user feedback, right? For protocols or to founders, right? If you're an investor, that's actually very critical information to provide people, is what is my feedback as a user, and how can I improve it, right? That's like the most simple thing that I would say. And I think like kind of being there from day one and like that's how you could quite literally add value, right? So I think doing stuff like that, activities like that, and helping build your network and engaging with these founders, right, is ways for you, I think, for you to build not only your social credibility, right, of like saying, oh wow, this guy or this girl is like super interesting, like I enjoy our conversations. I think it's a way for you to kind of slowly get to your path of becoming an angel investor and building kind of reputation between, I guess, teams, founders, what have you. So yeah, I mean, that's kind of a very simple way to say it. I think kind of how to become an angel investor, I think, takes time, right? So it does not happen overnight. You have to learn, keep learning, you have to further yourself and build your network and be active, right? I think within India as well, go to these meetups, speak to everyone, right? Like, I think those are super critical. And I think with the internet world, right, you don't have to go in person anymore, and crypto is mostly online. So network in these discords, go into these, now, especially there's now DAOs, right? I'm sure you guys have heard of DAOs. There's so many different DAOs that exist in today's world. I think engaging in those DAOs is a great way to kind of build your brand value as a person. Say, hey, I can contribute, I can do this. Going to these DAOs, being super active and contributing is a great starting point. I think that did not exist for a while, but I think these DAOs are all public. So it's a lot easier for you to understand where you want to be. There's different DAOs with different interests. You can go there, maybe, sign up to be a contributor, right? And then you'll build an amazing network, right? It's truly a global network. And I think that's the beauty of the crypto ecosystem. So I think another thing as well that's super important within the space, and I'll also kind of get to Polkadot because it is Polkadot conference or Polkadot webinar, so I will talk about Polkadot projects. But I think like another thing that's super important is like valuations, right? I think when you're investing into projects, how do you evaluate, like, I think evaluating, okay, so I think there's two ways. How do you evaluate a project, right? Which is like, is the tech stack make sense, right? The technology, what chain are they building on, right? Like, are they building on Polkadot? Are they like on Substrate? And within the Polkadot ecosystem, actually, I'll get to that. I think, what chain are they building, right? Like, as I said earlier, Solana, ETH, there's, even Tezos, for example. Some people are doing NFTs on Tezos, right? For example. And then there's also like, do they need a multi-bridge setup, right? Which is built on Polkadot, right? Like, will they benefit from having multi-chain interactions? But I think the thing that I want to talk about is like valuations, right? Like, when you're evaluating these projects, do you actually believe that, for example, I think like 2 years ago, I think Rune, Thorchain, right? For those that know, it's multi-chain infrastructure. I think it was worth like $10 million for a while, the market cap. But what they were targeting at that time, and I think today the product that they're targeting was a multi-chain world, right? Making trustless swapping of assets between any chain. And when you think about that, I think that's the valuation of that, the perceived value of where that could go if it was to get success, right? And be the number one kind of bridge between different chains. I think that would just, if it was realized, it was super valuable, right? We're talking tens of 20 to $30 billion, right? If it was to succeed at 10 to 20 million, the valuation kind of made sense, right? Like, so I think like when you're investing, you want to make sure you're not buying into something that's super overvalued. For example, there were a lot of IDOs that happened. I think between January 2021 to around like February, there was a lot of like scams that were happening within the Polkadot ecosystem. There was a lot of, they call them Polkadot projects, but they were just launching an ERC20 chain. They were launching an ERC20 token on the Ethereum chain, and they were doing some IDO where they would give like, let's say 1% of the, they would give 1% of the circulating of the total supply, and they would raise, we're talking like $1 million. They would raise like $1 million. Okay, they'd raise like $3 million, right? And they give 1%. So that's like $300 million fully diluted valuation, right? Okay, I'll just take a step back because some of you guys might not understand what fully diluted is. So in the crypto space, there's circulating supply, right? And there's the total supply. And a lot of these projects that launch, they have token lockups, right? So they release over time. So 6 months, 12 months, 18 months, depends on the project. And there's two really key metrics that people use in the space. There's the circulating supply, right? And the circulating market cap, and the fully diluted market cap. And the circulating market cap is basically a calculation of how many tokens are in supply today, and you multiply that times the price, and that's your current market cap. And then there is the valuation of the protocol, right? Which is, okay, there's tokens that are locked up. Why don't we put those in the calculation, right? So the total supply today, right, in circulation plus the ones locked up times the price, right? And then that'll give you your fully diluted valuation, right? And I think like there were certain points in this cycle, right? I think because we're in a bull market, I would say that fully diluted valuations tend to not really matter that much, because the market is just, it's basically like a buyer's market. People just don't really care. But I think when the market contracts, right, is actually when you start to find good deals. So ideally, you want to find deals where the fully diluted valuation is a lot lower, because that kind of de-risks your project, your investment, right? The risk reward will increase, right? Like I think ideally you want to find and research, if you want it to have the biggest upside, in my opinion, I think you want to spend time on the ground doing significant research, understanding what deals make sense, and ideally you want to find them under 50 to 75 million fully diluted. I think those are the best risk reward, but obviously you have to spend an extensive time researching and finding those. So I think I just kind of talk about one last thing before I wrap up here. I think like, okay, so I'll talk about two more things. I think like within the Polkadot ecosystem, I think the fully diluted valuation is very critical, right? I think we're now going to see parachain offerings happening on Polkadot, I believe on November 11th. There was the Kusama parachain offerings that happened. I think 2 batches happened, one in the summer. One happened in, I think like a month ago. And there was a project that I invested into called Hydra DX. And I think like it kind of, why am I mentioning this? Because it had this idea of like evaluating it from a valuation perspective. They did an LBP, which was liquidity bootstrapping protocol. And I specifically looked at this project because I saw that they had an amazing community. I went into the Discord, I spoke to their founders, and they always made everything community first, which was like, that's huge, right? Because you always want projects that care about their community, because that means that they're not purely greedy, right? And they're there to stick around for the long time, right? Anyone that cares about their community has a long-term vision. And that's a way for you to actually do due diligence on your projects, is you want someone that actually cares and thinks long-term, right? That's part of your assessment of what is a good kind of, let's say, investment. that was like one thing that stuck out to me kind of in my process for this project. The second thing is they did a raise. The LBP was like, they gave 5% of their kind of tokens, and they priced it according to making sure that the fully diluted valuation would not be that high for the general public. And it would be very favorable relative to what the private investors got, right? So I think I really appreciated that. And more recently, they created like a blog post and they said that they're increasing the value, they're increasing the allocation that they gave to their founders because they believe that community is number one. So yeah, I mean, I didn't know about this. This was a year ago I made this investment, but it's just, this is exactly what I'm trying to say is like, you want to make sure that you get a really good vibe from these founders and that their vision is aligned with what you think, right? It's super critical. I think like the last thing for Polkadot, like auctions, it's really interesting because the projects get due diligence because it's in the Polkadot ecosystem. If you actually win the parachain offering, it's in a way saying that it's signaling that you've actually succeeded, right? You've got the community on board. You were able to raise the funds and you made it. So ideally, like a lot of these projects that launch, they will be successes, at least in the medium to short term. And they will be pretty due diligence because they've got community backing. But my only thing is like, make sure you take part in like parachain offerings where they actually give a good amount of the like token allocation to the parachain participants, right? You don't want like 1% offering for the parachain offering. You want to look for 5, like I would say 10, 15, 20, and then the valuations make a lot more sense. But yeah, I think my last thoughts, right, for this, and then I guess we have questions, is like, keep learning, and the space is super big. Find people that like kind of genuinely push yourself intellectually, and just keep focusing on things that interest you, right? If you spend enough time here, you're gonna find things that interest you, and just keep honing in on that and like improve your understanding and like perception of it. I think eventually like build and work together with other people. That's how I kind of think it's like PvE, right? In gaming, like player versus environment. That's how I think about it. And just, I think if you put in the work, you go to these, meetups, you join these communities, you will learn a lot, and these opportunities will eventually present themselves to you. You will find that deal or that project that just clicks, it makes sense, and the deal and the valuations will most probably, because you will have put that time to be early to like, you put in that work, the valuations will probably be good at that point. So it kind of all comes together step by step. But yeah, I mean, I guess that's all I would say. Thank you.
Yeah, thanks, Karthik. We have a couple of questions for you, so let's take them. First one is, how much value do white papers still hold in eyes of investors, where almost all real or fake projects have white papers, especially when they are done up by professionals? So how do you evaluate such projects who get professionals to do it for them?
Yeah, so I mean, that's a great question. There's a lot of raises that I've seen recently where they didn't have any documents, as a matter of fact, which is true, kind of crazy. The market is pretty hot. I would say the white papers, I mean, they are interesting. I think they're good for due diligence, right? But I would say that a lot of projects nowadays, especially DeFi ones, do not have white papers. They kind of launch first and then figure it out. I think like if you saw your traditional layer ones, I think like, so I mean, the answer to that question is, I think they're cool if you want to learn, but I don't think they make or break an investment. From an investment standpoint, I think like there's a lot of Medium posts, there's a lot of documentation that projects will give, or protocols that will give, that will provide a value of how for you to understand these projects. I don't think you actually need your white paper. I think there's a lot of light papers that people do, or like Medium blog posts that explain their protocol thoroughly, and I think that's enough really to evaluate.
Yeah, that makes sense. All right, the next one. What's the future of Polkadot blockchain development ecosystem in context of India, especially when we do not have a regulated market?
Yeah, I mean, this is something we think about a lot from the fund, right? It's like, I think the highest risk investments within India are definitely brokerages or anything that touches the fiat space, because it's not very clear, right? There's not really clear guidance within India. So I think those are the highest risk. I mean, that hasn't stopped funding going into the space. I mean, there's a lot of big funds that are investing. I think CoinSwitch is raising, or they might have raised. But yeah, I think like for Polkadot specifically, or I think like there shouldn't be any issues because I think like I don't think there's any problem for people building or launching protocols, right? Or DeFi applications or stuff like that, or NFT applications. I think the big risk, at least from a regulatory standpoint, again, I'm not an expert, but just what my general understanding is, like the highest risk are definitely brokerages. So I guess my answer to that question is that I think there's no problem for Polkadot. I think it's basically clear skies. Like I think you guys could build really anything. And I'm kind of excited because now once the crowd loans start, the first round of crowd loans start, like I think in 2-3 weeks, I wouldn't be surprised. I think the excitement will happen. I'm waiting to see the first Indian founder to do their first crowd loan in India. I think on Polkadot, I think that'll be a pretty cool moment in space, like in this space, right? And I think that will allow, and I think that'll give motivation to others to kind of take that journey. I think we're probably in this year itself, we're probably going to see a bunch of Indian projects come and launch and do it might not be on Polkadot, it might be on Kusama, but I think we'll see it. Founding teams come out of India as the space evolves.
Great. All right. Next question from Amit is, could you highlight the key differentiators between Polkadot and Cosmos?
Yeah, it's a good question. I think Polkadot and Cosmos, they're definitely proponents of the multi-chain world. They basically created that idea starting in 2017, 2016, but I think publicly 2017. I think both of them have different trade-offs, right? I think the belief for Polkadot, so I think both of their general beliefs was just like the world is multi-chain, but I think Cosmos believes that they believe in sovereign chains, right? Not shared security. So they built an SDK that has a plug and play approach to building a blockchain and deploying it, but you have to find your validator set, right? You have to find your own validator set, and you can be fully interoperable, right? So you're now seeing multiple chains, right? I'm sure you guys have heard of Luna, right? For example, you've heard of Binance Chain, there's Secret Network, right? These are all chains that exist by themselves. They're their own, and they have their own projects that launch within like their own blockchain. So I would say Cosmos is a blockchain framework, but to build sovereign chains. Polkadot is a little different. They took a different approach. They actually made it a lot easier, in my opinion, to build, because they said, don't worry about validator set, don't worry about security. We'll share that with you. All you have to do is build your blockchain, right? So in Polkadot, they have something called a beacon chain, right? And I believe that shares the consensus and it shares their trust with any chain that builds. You have to do a parachain offering to get onboarded onto this chain. But once you're onboarded onto the Polkadot chain, you can interoperate with any other chains that are on this, the Polkadot ecosystem or the Kusama ecosystem. So I think they took them a little bit different. Cosmos did sovereignty first, and Polkadot did shared security first. But I believe we're going to start seeing both networks do the opposite, because I think the future I think Polkadot said that they're looking at sovereignty after shared security goes live fully. And it looks like Cosmos is exploring shared security. So, they're basically solving the same things. They just took two different approaches. But I'm kind of excited because the beauty of having two technology stacks is that it attracts two different types of developers. And I think for us in the blockchain or the crypto space is as long as we get more developers, that's all that matters, in my opinion. It's a net win for the space.
Great. Okay, we have one more from Prashant. That is, what is that one red flag which you often see in crypto projects that will stop you from going ahead with the funding process?
Yeah, it's a great question. I think like finding very greedy founders very greedy, limited information about the project, right? Very greedy I think founders is always usually a very big red flag. I think like a lot of these things that are super hyped on Twitter or like overly hyped, a lot of them turn out to be like duds because they're either very high valuations. But I think like one thing that's super critical is this transparency between, you know, you will be able to speak and understand about the project, right? I think that there's limited information about the project and you're unable to get an idea of what that project is. And I think that kind of relates to the white paper question, right? Like you don't need a white paper, but if there's significant, like I would say there's a good community, right? If there's significant writings and explanations about how the protocol works, what they're trying to do, I think those are ways to like de-risk your project. I think those are the key things, is just making sure that there's significant documentation. It doesn't have to be a white paper, but you have to be at a point where you actually understand what they're doing. I think that's super important. If people are very esoteric, very money grabby, or they're just doing a fork of a project, I'm always like kind of wary of that, right?
So that's clarity of great. So I guess that's clarity of thought put down on paper or text, but as long as they're able to put across their idea to you very clearly, right? Okay, our last question, how do you get to know whether a community is strong, and the 3 things you look for before investing?
So community strong said 3 things I look for? Is that what you said?
Your top 3.
Yeah. So I think like, great question. I think like now community is a lot easier to assess. Back in the day, it would be just Telegram, right? And I think people still use Telegram, but Telegram is very like, I think like there's less depth to Telegram. There's a lot of like, it's just like one stream of thought. And Discord, I think now Discord is, it's a lot easier to assess community now, more so than even speculators. I think speculators are cool, but like you want to have people that are actually intellectually curious, they're potentially builders that are looking at this protocol, right? That's a high quality community, people who are engaging, right? More so than just speculation. Speculation is cheap, right? When the market is good, they'll come, and when the market's bad, they'll go away. So you want to kind of assess a community. Like with Discord, the depth of it has increased substantially. There's different topics, subgenres, and there'll be like different stuff around like the protocol. The least being speculation. Most will be like different use cases, different features they're testing, and then you'll see all these different people in these kind of participating and engaging in these, you know, different kind of thought exercises within these Discords. So I think a project that has a very extensive Discord is usually a very good sign, right? And you see people engaging and not talking about speculation, right? I think that's always a very good sign if people are actually interested about the product and genuinely curious about how it works, right? Those are usually extremely good signs of a good community who are long-term minded and who are kind of in this intent to like see that this thing succeeds, right? Usually if it's only speculation or trading, that's usually not a good sign, in my opinion. But yeah, I think the 3 things for me when it comes to investing is just like, look at the valuations, look at the community, see the technology stack, right? You don't want to go and build, like, I think investing in a technology stack that is not, that you don't see the network effects in is high risk, right? Like if someone came to me and said, would you invest in this project on the Stellar blockchain, or would you, like, not Stellar, I would say, like if you were to invest something on the Cardano blockchain or something like that, sure, it could do well, but you want to make sure that it will actually succeed, right? Like I think like Solana has a massive ecosystem, right? Like if you build something, you know you're going to get network effects. You build on Polkadot, you know that the ecosystem is huge, right? Like the community is amazing, right? The builder community, we're here today, right? There's so many people on this call, right? So there's interest. You want to make sure that the project you're investing to will potentially have some effects where you actually see a future where they can grow, right? I think you don't want to build in some dead spot. Like I think building an application, for example, on Tezos might not be interesting, but building NFTs on Tezos is interesting, right? Because they have a massive ecosystem, right? So if you invest in NFTs there, it actually could be interesting, right? Because there's a huge ecosystem. So it's kind of understanding what makes sense where, on what protocol, and what you think probably has the best chance of success. I think the last thing for me, like the 3rd thing I would say, like I think like being early and being like, I think like seeing a project grow is always a really cool thing for me, right? As I see a project like start small, and then I see the progress of these things. You know, the founder go through their journey publicly in a public domain, right? We're talking, you know, through Twitter, through Discord, through whatever channels they have, seeing it grow. Those are things that I personally really like, right? And because you see progress, right? So I think that would be probably the third thing that really assesses, and how I get to my kind of point of, okay, I want to participate, I want to invest and take part in this kind of project.
Great. Thanks, Karthik. I think this was much required for many of us. It's always very tricky when it comes to cracking your investors. So to hear all about how projects are truly evaluated is quite the relief, to be honest. So welcome to Polkadot India again, Karthik, and we're really glad to have you in the family. Thanks for your time.
Yeah. Yep. Thanks for having me, Anya. Thank you, Amit. It's a pleasure talking to you guys, and I hope to be back sometime soon.
Thanks, Karthik. All of you, if you have any further queries at all for Karthik, reach out to us on Twitter again, and we'll get them answered for you. With that, we come to a close to this DotFriday, and we are already excited to bring to you our next episode of DotFriday on the 19th of November. So do join us. You've all been a fantastic audience, and thanks for keeping it interactive with all your questions. We would love to have you around for all our upcoming events. Stay connected with us on WhatsApp, Telegram, or Twitter, and watch out for a lineup of exciting tech events in the coming months. Have a great evening all, and happy weekend.